Wednesday, July 1st, 2:46 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. It's the first trading day of the new month. We just finished the second quarter of the year. We are halfway through the year now. This month, companies will report their earnings. That'll be public information. Since we just completed the month, which happens to be in the middle of the week, you might get some misinformation on charting. So I want to show you from the higher time frame. We're going to look at candlestick charts. My candlestick charts, I'll show you how I have them labeled because many people do them differently. This is a 10-year chart of history, price action of the S&P 500 cash index. The green candles, they represent months when the close was higher than the open. The red candles represent the month when the close was lower than the open. The yellow candles represent that they didn't take out the higher low of the prior month. So you got it. We're looking at data where each candle represents the month. And since yesterday was the last trading day of June, the new candle to the far right is representing the first trading day. But we're concerned about the last candle that just finished yesterday for the month of June. S&P 500 cash index. It's bullish. Last month made a new high for the year. We closed red. We closed back inside the trading range of the prior month. That's concerning. 500 publicly traded companies. And again, this stock index is made up of several stock indexes as well as 11 sectors. So it's a very broad stock index. It's been bullish for several years. The NASDAQ 100 companies. Last month made the all-time new high. Closed red back inside the prior range. The NASDAQ 100 is part of the S&P 500. So you could buy the S&P 500, be more diversified instead of buying the NASDAQ 100, which is heavily weighted towards tech. Dow Jones Industrial Average closed green last month, all-time new high. And the current month, which is the first new trading day right here, already making a new time high. Dow 30, one of the oldest stock indexes, 30 companies. I shared in my video this week and last week that last Friday, I took a trade, a bullish trade on the Dow Jones Industrial Average using options. The contracts were good for 14 days. I also shared last month that this past Monday, the Dow Jones Industrial Average was replacing Verizon, taking it off the index and putting it with Google. That bullish trade I placed last Friday closed Monday morning for 30% profits. So I didn't have to stay into expiration. If I stayed into expiration, the max I could make was 100%. But again, staying into expiration, prices fluctuate and it could have gone against me. Making 30% in those two trading days was acceptable. Good money management. Dow 30, it's part of the S&P 500. The Dow Transport's part of the S&P 500. Closed green last month, but below the high of the year. Again, it has 20 companies. The Dow Jones Utilities, 15 companies, it's part of the S&P 500. Closed green last month, lower high, lower low. And now we're looking at the RUT, aka Russell 2000, not part of the S&P 500. Small cap companies. Closed green last month for the new high of the year. And this first trading day of the new month, new high of the year. So looking at the major stock indexes I just showed you, you could tell that we're in a bull market. The stock indexes, bull market. They're not all performing equally. What's concerning is the S&P 500 and the Dow Jones. Last month, I told you, while they each made new highs, they closed red. The Dow Jones closed green. That's a divergency, but it's expected in the Dow Jones because, again, we had a stock replaced. It's also that stock is what? Technology, Google. It's part of the NASDAQ 100. Yep. Now, the concern here is if the long-term yields continue going higher, the Russell 2000 is one of the early birds to get hit hard. The Russell 2000 are small companies that have a lot of debt, borrow a lot of money. They're much more impacted by interest rates. So it's making new highs here because the market's bullish. So people looking for cheap stocks, less concerned about the performance, buying cheap stocks, and think their market only goes one way. Hot potato, they're likely going to be the first ones to be part of the catastrophe when it happens again. Nothing wrong with buying leadership, the S&P 500. Why would I want to be taking on more risk here? That's what some people want to do. I personally don't do that. Let's go on to the next. We'll look at the 11 sectors, the S&P 500. So the first sector, XLB, where we had a new high for the year, but it was not last month. Nope, we're in a big consolidation here. Communication services. Look what we did last month. Big red candle, lower low, lower high. So again, this is trading down, opposite of the S&P 500. It's part of the S&P 500. So it has an impact on not making the S&P 500 perform outstanding. This one is hurting it. Yep. Energy, XLE, also new low last month. Lower low, lower high. So we just saw two sectors that are hurting the S&P 500. XLF. First month of the year was the high. It sold off. Last month, green, higher, high, higher, low. So it's doing the opposite of the S&P 500. The S&P 500 last month made the new high for the year, not the financials. Technology. Yep, up strong. Again, all these sectors I'm showing you are inside the S&P 500. Industrial. New high last month. Outstanding. Consumer staples. Nope, not a new high. Real estate. Below the highs of 2021. Really, really bad. It's also below the highs of, actually they broke that, right? 2024. Yep. So below the highs of 2021, extremely hurting the stock index of the S&P 500. Utilities. Earlier the year was high of the month, but look, last month, green candle, lower high, lower low. The trend is down. Healthcare. Interesting. Last month made the new high for the year. Healthcare. Consumer discretionary. Well, we had earlier in the year, the high of the year. Last month, red candle, lower low, lower high. So you see what? I have a lot of sectors here that are performing worse than the S&P 500. So the S&P 500 is very diversified. And we have the technology, the financials that are much more heavily weighted in the stock index. So if you want to outperform the S&P 500, you could buy one of these and try to outperform it. Let's go to the Magnificent 7, plus some additional stocks I have in there. Magnificent 7 are in the S&P 500, in the NASDAQ 100, in the S&P 100. They represent large weighted average in the S&P 500. So when these move up or down, they have a big impact on the S&P 500. Apple, last month, all-time new high. Outstanding. Amazon, last month, lower high, lower low. It's declining. It's doing worse than the S&P 500. Again, I'd rather be invested in the S&P 500 than a single stock. Now, when I say invest, I'm talking about what if I'm doing dollar cost average, buy and holding for longer term and doing contributions. But that trade I mentioned, the Dow Jones Industrial Average, that option trade I took, that's a swing trade. It's not a long-term investment. It's a swing trade for happened to be 2 trading days. Very successful. And Alphabet, Google, last month, lower low, lower high. So right off the bat, I want to show you Apple, Amazon, and their alphabetical order. Meta. 2 of these top 3, we saw lower lows, lower highs. They're hurting the NASDAQ 100. They are hurting the S&P 500. They're underperforming. Again, the stock index is doing better. That's because the stock indexes are heavily weighted towards just a few companies. That's dangerous. Meta, aka former Facebook, is last month, lower low, lower high, below the highs of last year, underperforming, outstanding. Just kidding. It's doing terrible. It's bearish. It hasn't even taken out the high of last year. The stock indexes are performing better. Microsoft, look at that, below the highs of last year. Huge red candle, making a new low for the year. Problems. NVIDIA, last month, lower high, lower low. So this orange vertical line, that's when it was added to the Dow. Tesla, underperforming last year's high. Terrible. Tesla. Yep, underperforming. Netflix, new low for the year. Bearish, new low for the year. Huge investment institutions selling. I would not want to be buying on the lows down here. It could go a lot lower again. Big company declining in price means the institution money that manages it are not buying it. They've been selling it for the past weeks and months. It could go a lot lower. So if I want to make money, being a winner, I'll be invested in the S&P 500, buying on the dips. Netflix is hurting the NASDAQ 100, hurting the S&P 500. Yep. High probability it continues going lower. May have a bounce and then go even lower. Not healthy. SpaceX. Last month was that big green candle. And that's where we are now. Show you the SPX again. So this is the cash index, the S&P 500, which I mentioned, the 11 sectors are in it. For me, it's a better investment. Yep, much better. So let me show you single stock, just like all the other ones I just showed you. This company, top left, the high of 2021. Last month, new low for the year. As it gets lower, closer to $5, it can be delisted from the stock exchanges. It can be delisted from stock indexes. Again, it is a loser. It's going down. Institutions are not buying it. I rather focus on good, solid stock indexes, which are diversified, representing the economy as a whole. So I stick with the S&P 500 for long-term investment, dollar cost average. The point is, the other individual companies, they are not well diversified. They can be halted and delisted. Where I just showed you the Dow Jones Industrial Average, they removed the bad companies, add the new companies. The NASDAQ 100, I did a press release a few days ago. Excuse me. They're taking a company out and they're going to replace SpaceX on the stock index. That's my Patreon page below. So again, these stock indexes, the momentum of them, the mindset, understand, the diversified, the people that manage them, remove the weaker ones. Less emotional attached. Thank you as always. Spending a little time with me. That's it for the video. Thank you for watching. Thank you kindly for support.